connected with Mr. Ashok Chandra, MD CEO, Punjab National Bank. Mr. Chandra, good morning. Welcome to the show and Diwali greetings to you. Let us just begin with the quarter earnings. You've reported 4% Q-on-Q growth this quarter. What's driving this number, and is this growth sustainable, sir?
The number which you have quoted and the growth which you have quoted, I think it is based on the growth which has happened in the retail, agri and MSME. Retail, if I can share the number, it has grown with 18.1% YOY. And agriculture has grown with more than 13%. MSME has grown with 18.6%. So these are three important segments, and for which the bank has also put a lot of focus, having 10,200 branches. We are seeing the good tractions happening across the geography. And this has brought a lot of momentum, and that is the reason you are seeing good growth in the asset side now. Liability side also, bank has done very well, and consistently we are double-digit growth in the last quarter also, and this quarter also. Even the corporate loan book also in this particular quarter, we have grown more than 7%. So I think all the segment things are picking up very well, and I'm seeing a good growth in the coming quarters also.
All right. So, hi, Mr. Chandra. This is Kanishka also joining in. So, that's about growth across segments. But just wanted to understand if you could, help us. What's going to be the impact of ECL on your financials between FY27 and 31? If you could just explain that to us.
See, we have done some rough calculation, and there are three stages of calculations are there in the ECL: stage 1, stage 2, and stage 3. And stage 1, almost 0.40% the provisions are there, which is we are already doing it in the standard assets. Much changes are not there in that, except that unsecured retail loan, where the stage 1 floor provision is 1%. Other than that, whatever we are doing it for the standard assets, it is the same now. Stage 2, there is elevated provisions are there, and that is for all the sectors. It is 5%, except the housing loan and the loan against the property, it is 1.5%. Otherwise, all the sector, it is 5%. And stage 3, if I can talk about our bank per se, because we are already having more than 96.9% of provision. So that takes care of the provision which is required to be done in the stage 3 stage. So the main challenge is on the stage 2 floor, and there we have done some rough estimation, and for the entire system, it comes to around 75 to 80 basis point in the CRAR, and if I can spread it for 5 years, it comes to around 15 to 20 basis point for 5 years. So, and bank is already well poised. We are having a good net profit. So going forward, I don't see any much challenge happening on account of the ECL migration.
All right, Mr. Chandra, what is the additional provisioning required under ECL, and by how much will your credit cost increase in FY27?
No, ECL I have already indicated, and I have given you the full estimate also. The entire burden will be in the range of around 9,000 crore. And that will be straight for 5 years. And if I can put it in the CRAR number, it comes to around 15 to 20 basis point for every year. And since we have a good net profit, I think we are well poised to take care of that requirement. Credit cost, if you see, the first quarter we had 0.14%. And in this particular quarter, there has been a good write back of provision has happened. And despite making a fresh provision of around 600 crore, we are negative in the credit cost. So having good the PCR and good recovery happening in the system, I think the guidance for the full year which I have given, that is less than 0.5%, I think definitely we will be well below that mark.
All right, so that's about guidance. But Mr. Chandra, let's also talk about your margins. Now, this quarter marks the bottom for margins, right? So how much will margins improve by the fourth quarter of this fiscal, and what will margins look like for the full year FY26, that is?
Yeah, in fact, if you recall my earlier interaction, we had already indicated that Q1 and Q2, the impact will be there of the 100 basis point rate cut in the repo. And Q2, there has been a full impact of that 100 basis point impact. And we had already indicated that going forward, Q3 and Q4, all our deposits, most likely it will be repriced, for which it was a 1 year deposit or 400 special deposit, which the bank had garnered earlier years. So all those deposits are getting repriced, and the real impact on the NIM and NII, we will be able to see in the Q3 and Q4. And I'm expecting that at least 5 to 7 basis point the impact will be there in the upper side in the NIM. Right now we are at 2.72 in the domestic, and I'm expecting that we will be touching around 2.7 to 2.8. And going forward in the March quarter, I'm expecting that 10 to 15 basis point improvement should happen in the NIM.
Right. So, talking about margins, what could FY27 margin normalize at if there are no rate cuts?
I think, see, let us complete this entire financial year, and then in the month of March, we come out with our budgeted figures, the target for that 26-27 entire financial year. And the situation is very, very dynamic. So let us wait and see that how these entire things pan out. But bank is in a good position. We are the top line also good growth is happening. Bottom line also, you see the quarter to quarter good, the profit is there. Operating profit has crossed more than 7,000 crore in a quarter now. And the net profit in this particular quarter itself is more than 4,900 crore. And all these things, the trend is going to continue. So I think bank will be in a very good position in the 27-28. But number wise, I think we will deliberate those numbers in the month of April.
All right, so the bank could be in a good position in FY27-28. That's the word coming in. But lastly, Mr. Chandra, before we let you go, if you could just help us understand what are the next levers to watch to improve ROA going forward?
See, if you see our ROA is more than 1% in this particular quarter, it is 1.05%. And since we are posting a good operating profit and good net profit, I'm expecting that this trend will continue, and we will be touching a ROA of 1.10 in Q3 and Q4.
All right, with that, we let you go. Thank you so much, Mr. Chandra, for participating and being on the show today live with us. And